Welcome to my channel. Today's class is about accounting treatment in the case of dissolution of a partnership firm. Capital account of the partners. Each partner's capital account is credited with the accumulator, that is the credit side of the partner's capital account. We can see the accumulated profit. Accumulated profit means the profit that is added for many years. Accumulator. And realization profit, that is after realization profit means the profit after preparing the realization account, if any. And debitor, on the debit side, the accumulator losses and realization loss, if any. After making any other adjustment as per the agreement, the balance in the capital account represents the amount due to or due from each partner. Due to means the amount that has to be given to partner. Due from means that's to be paid by the partner. The partner's capital account are closed by paying off or bringing in cash as the case may be. Loan from a partner. Amount advanced by a partner as loan is usually not transferred to the realization account like other liabilities. It is paid directly through the loan account, to the partner's loan account itself. This is because a partner's loan must be repaid before making the payment of capitals. Then, loan from the wife of a partner. This is to be treated as if it is an outside liability, hence it is taken to the realization account along with the other outside liabilities. Then we have to prepare the cash account, cash or bank account. After entering the cash realized and paying towards liabilities and realization expenses, the balance in this account equals the balance in the capital accounts of the partners. When final settlement is made, cash account and partners capital account will automatically be closed. Then we can discuss about the journal entries. For closing the asset account, the journal entry is realization account debited to asset account. Then if there is any provision against the asset, then it is closed by the following entry, that is provision for doubtful debts account, provision for depreciation account, joint life policy reserve, that is the joint policy of the partners, then contingency reserve, then investment fluctuation fund account debited to realization account. Then the entry for closing the debit balance of profit and loss account. Debit balance of profit and loss account means it's a loss. That's the entry for this closing. This one is partner's capital or current account debited to profit and loss account. Then for closing the liability accounts, the entry will be the concerned liabilities account debited to realization account. That is, liabilities include sundry creditors, bills payable, bank overdraft, outstanding expenses, partners wise loan account. Then other items on the liability side like reserves fund and credit balance of profit and loss account are transferred to the partner's capital account directly. The entry will be reserve account debited, profit and loss account debited to partner's capital account. Here this profit and loss account means the profit. Therefore, transferring the provision, if any, related to liability, realization account debited to provision account. For the sale of assets, cash or bank account debited to realization account. For the assets taken over by the partner's capital account debited to realization account. Then for payment of liabilities, realization account debited to cash account. If the partner is agreed to discharge a liability, then the entry will be realization account debited to partner's capital account. For expenses on realization, The entry will be realization account debited to cash account. If a partner meets the expenses on realization, then the entry will be realization account debited to partner's capital account. Instead of cash, it will be partner's capital account. For the amount realized from the unrecorded or new asset, cash or bank account debited to realization account. For unrecorded or new asset taken off by the partner, partner's capital account debited to realization account. Then for the payment of unrecorded or new liability, realization account debited to cash or bank account. For the unrecorded or new liability discharged by the partner, realization account debited to partner's capital account. Then for closing the realization account, if it is profit, the entry will be realization account debited to partner's capital account. If it is loss, the entry will be partner's capital account debited to realization account. Payment of partner's loan account debited to cash account. For closing the current accounts, partners, if it is credit to balance, the entry will be partner's current account debited to partner's capital account. If it shows the debit balance, entry will be partner's capital account debited to partner's current account. For closing capital accounts, the entry will be partner's capital account debited to cash account. If the capital account of any partner shows a debit balance, he should bring in cash to settle his account with the firm. Then the entry will be cash account debited to partner's capital account. Then regarding the goodwill on dissolution of the firm, no special treatment is required for goodwill in the case of dissolution of the firm. The following procedure will be adopted. If it is appearing in the balance sheet, it will be treated like any other asset and should be transferred to realization account at book value. That's the original value. If it does not appear in the balance sheet, it is not to be calculated. If there is any thing realized in cash for goodwill, the entry will be cash or bank account debited to realization account. If goodwill is purchased by one of the partners, the entry will be partner's capital account debited to realization account. Then the format of realization account is given. Then the cash account, these accounts are prepared from the journal entries discussed above. Then the cash account, so in the case of dissolution of the firm, the accounts prepared will be realization account, capital account and the cash account. Here it is written the difference between revaluation account and the realization account. In the revaluation account, it is prepared at the time of admission, retirement or death of the partner. In the case of realization account, prepared at the time of dissolution of a partnership firm. Then realization account is prepared to show the assets and liabilities at their revised values and to know the profit or loss arising therefrom. Then realization account prepared to know the profit or loss on the sale of assets and payment of liabilities. Then revaluation account, only the change or increase or decrease in the value of assets and liabilities are recorded. Then the realization account, assets and liabilities are shown at the book values. Then the revaluation account, no expenses are shown, but in the realization account, realization expenses are to be shown. Then in the revaluation account, after preparing the revaluation account, the firm will continue. Then the case of realization account, after the preparation, the firm is dissolved. That's all for today. Thank you.